Hello, and welcome to the Books Crypto Club weekly catch-up on Zoom. It is Sunday, the 13th of March, 2022, and today we're going to be talking about whatever. Blockchain, crypto, DeFi, NFTs, ICOs, SCOs, yield farming, who really knows? It depends upon who the audience is, what they want to talk about. And we go with the flow, really. So I hope you enjoy this. If you do remember to click on the subscribe button, do smash that like button as well, click on the reminder, and even better, come along to future events. We hold these every Sunday at 7 p.m. UK time, and everyone's welcome. So if you're a novice or an expert in the crypto space or blockchain space, come along, show your knowledge, show your ideas, or come along and ask questions. Everyone's welcome. So let's see who's going to come and join us today. Sandeep, hello.
Good evening, Gary. I'm Sandeep here. It's nice to meet you.
Hey, good of you to join. Hi. And Anthony as well. Hello, Anthony.
Hello. Gotta get used to Zoom again. I haven't used Zoom in a while.
Yeah, Zoom and WebEx and Teams and everything else. That's great. Well,
and Google. Don't forget.
Yeah.
Google,
Keep them at Google. Sandy, what brings you along today? What's your interest?
I mean, I would like to know about the crypto. Basically, I would like to know, what's going on and do some investment in the early days. So basically, I'm, using Coinbase to do, small investments, but, I would like to know, what's happening in the market and, what are the kinds there is a potential and, basically, do early investment and, that's pretty much about it.
Okay, that's good. Well, the very fact you've got a Coinbase account puts you ahead of some people straight away, because we get people who come onto these sessions and they're open to anybody, whether novices or experts. And so sometimes we get people who don't have any crypto, who are just learning about the space, and other times we get people who run their own wallets, as in their own wallet companies and that kind of thing. So we get a real mixture of things. So. So we got a real mix. So we've got like Anthony, for example, who Anthony's probably been working in the blockchain space at least for how many years now, Anthony, did you say?
3 years, 4 years, 5 years, something like that. Yeah.
Okay.
Wow. Yeah. Good to know.
Yeah.
So we get a real mix. But in terms of what's going on with the market, we never really know truly. I always say that the market is controlled by a butterfly flapping its wings somewhere, and it's all completely random. The reality is it's probably manipulated in some way, but we just don't know. So it's open to anything. Hey, Elena, you're back again. Hi there.
Hi, how are you all today?
Hey, we're good, thanks. How are you today?
Great, very good, and as always, looking forward to listening to what you all have to say.
Elena, I think, is she's the quiet person who always listens to these things. And I think she actually knows quite a lot now. It's really, really good.
I don't have much to say at the moment.
No?
It's going to change one day.
Yeah. But are you based in Ireland? Is that right?
Yes, I'm in Ireland. Yeah.
I remember now from the introduction originally. Well, it's good to have you here again. It's great.
Yeah, thanks.
And I was just saying with Sandeep, who's joined us the first time today, we get a complete mixture of people who come along to these sessions who may be novices, who are just learning, or have been in the space for a while, or experts. We've got Chris, who's trying to join us at the moment. Chris, who's trying to come in, is more into the art side of things, of NFTs with poetry and that kind of thing. So a real mix of things, Sandeep. So
good to know. Yeah, no, I do not know much about crypto at all. So this is an opportunity for me to explore. So I think
Brilliant. So well, if you have any questions, no matter how basic, please ask away. What I always find is that the more basic the question, the better. You know those ones where you think, I feel really awkward asking this. They're usually the ones where everyone else who's in the meeting goes, oh yeah, I want to know that as well, but they never admit to it. So do feel free to ask anything. And Elena, the same with you. If at any points there's anything you want an explanation of, or anything you've heard about, or anything I've said that you don't understand, then hopefully I can answer it or help it. Or I'll turn around and say, Anthony, you'll know the answer to this. So anyone care to share anything that they've been looking at of interest of late? Anything going on in the crypto market or the blockchain space? I see there's lots of news around in the UK, the FCA banning crypto ATMs, so bank machines. That was interesting in the news during the week. In the States, the US are continuing a court case against Ripple. So you may have seen of XRP, which is Ripple's cryptocurrency, which is different to Ripple company, but it's all kind of connected, and there's a big case going on with that. And we might be joined by someone who watches that quite closely. But meanwhile, we've got Chris who's joined us. Chris, say hello.
Hello, everyone. Just dropped in to see what the chat was going to be this week.
Yeah. Well, you were talking last week a little bit about your NFT space and NFTs and poetry, wasn't it? It's a combination.
Yeah, I'm kind of like dabbling in some pretty sketchy artwork and combining that with poetry, but with kind of social commentary. I kind of like have a look at what's happening in the newspapers and choose a newspaper headline and see what comes into my mind.
Chris shared with me the other day, you've created it. Is it you that's created the virtual art gallery, where you walk around it, you can look at the news headlines up on the wall, and quite an amazing thing. If you want to share a link to that in the chat, feel free to, because I thought it was really interesting.
Yeah, I'll do that, definitely.
And this is the thing that for everybody really, that you find that crypto originally was just around, Bitcoin and then Ethereum and then various other cryptocurrencies, like many of these behind me here, but has extended since, and we've now got things like NFTs, which is a growing subset, and DeFi and the whole decentralized finance. I was on a call with someone before talking about that. So many things happening. So anyone got any questions or comments or anything? Anthony, you came off mute there.
Sorry.
Go ahead.
Go on, Sandeep.
Yeah, is it NFT also one of the crypto? Is it right, my understanding?
So NFTs, and anyone else who's on the call, feel free to correct me if I'm incorrect here. An NFT is typically a token that is managed by a smart contract. So you kind of have to peel the layers away here. If we think about, let's talk about what a cryptocurrency is first of all. So at the base layer, you've got a blockchain, which is a database that is managed by a particular software protocol. So that's typically a blockchain protocol in some way. So you may have heard of Bitcoin, Ethereum, and so on. That's the software that manages the network, keeps everything in synchronization and that. And usually a blockchain has what's called a native cryptocurrency. So the Bitcoin blockchain has got Bitcoin, Ethereum has got Ethereum, Dash, Monero, these are all native blockchains. And they're what are used as incentive mechanisms for miners to mine the cryptocurrency. And that's how that comes into existence. So that's kind of the base layer of cryptocurrencies to begin with. The layer above that is where you've got programmability. And this is where the likes of Ethereum has come in. So Ethereum developed smart contracts. So you may have heard of ERC20 tokens, and they are smart contracts. Actually, ERC20 is a programming standard kind of thing almost, which creates tokens which you sell, and they look just like cryptocurrencies. So you can go onto Binance or crypto.com or whatever, and probably several of these are probably crypto tokens as opposed to cryptocurrencies. So they're tokens that are managed by a smart contract, and they are fungible in as much as one token is equivalent to any other same name token. So if you've got, I'm trying to think of a token offhand that I've been looking at lately, an IXT token, one IXT token is worth the same as any other IXT token. And it's divisible, and like Bitcoin, it's effectively an entry in a register. A layer above that is what you call in Ethereum an ERC721 smart contract. So this is another piece of program that manages a token, but that token isn't fungible, it's unique. So it's got a one-for-one relationship with something. So Chris, who's doing his digital art or poems or whatever, will have a specific token that is associated with ownership of that art. So there's a slight difference. So they all start blurring with each other. And what you find is that cryptocurrencies like Bitcoin, crypto tokens, and NFTs, you can almost buy and sell them on the same exchanges. They're interchangeable, and a lot of time you can't tell the difference between them. Did that help, or did that confuse even more?
I mean, it is a little confusing, you know, as a understanding is a basic understanding of my knowledge, I think. But yeah, I do get the sense of it. Yeah, what does it mean? Yeah, that makes sense. Thank you.
So typically, and again, Chris, with him being in the NFT space, can feel free to correct me on this. But typically, an NFT is used to demonstrate ownership of an end asset in some way. So it's a little bit like having a certificate that shows that you own something specifically, like a piece of digital art or a piece of music or a piece of poetry, perhaps.
Yeah, that's right.
Go on, Chris.
I think the main thing that people should understand is that having that certificate enables you to monetize NFT. It gives you the right to exploit it. And also, I forgot the other thing that I was, the other point I was going to make. But yeah, essentially, people can read poetry, people can look at the art, you know, there's nothing that stops people from sharing it. It's all digital, so it can be looked at. But the real value of it is that, you know, you can exploit it and you are you kind of own the copyright in one regard, that you're able to do that. And also, the other thing I wanted to add was NFTs are really useful when they are associated with a business or a product or something that is verifiable, in that you can operate something on it. I don't know if I'm making sense.
Yeah. The other thing, for as Chris will be aware as well, because an NFT is managed by a smart contract, so this is this ERC721, for example, if it's on Ethereum, is that you can actually program the smart contract to give back a percentage of the value back to the originator. So if you think about, if you've got a piece of art, you know, a Canaletto or a Kandinsky or whatever, and the painter paints it and they make the money from selling that art, and then the art gets sold on and gets sold on and gets sold on. The artist, the original artist, never gets to see any of the additional revenue from when it's resold. Whereas with an NFT, you can actually have within the program that a percentage of when it's resold goes back to the originator. So it's almost like having a kind of like a license fee type thing. And this is where I know some crypto artists that love it, because they'll create some crypto art, they'll sell it as an NFT, and then when it gets resold, they get 5% or 10% of the resale value as well.
Yeah.
Got it. It is the same like how the copyrights for any music or anything. I think that's how they get paid. Yeah.
Well, it's kind of interesting because they're trying to get to that route. So digital copyright is something that NFTs don't solve yet. So if you've got like a JPEG or a movie file or whatever, an NFT simply proves that you are the ownership of that JPEG. It doesn't prevent people from copying it or looking at it or whatever. So some of the work I'm doing with a startup at the moment is around having it where the NFT actually acts as a key to provide access to the NFT. So that will be different. But at the moment, all an NFT is it's a digital receipt, in effect, to say that you own something. It doesn't prevent people from getting to the JPEG or whatever at the moment.
Got it. Thank you.
Anthony, you were going to come in on something before.
I can't remember what it was.
It was minutes ago.
Yeah, it
So-
wasn't. Yeah. I mean, just to give everybody a little, tell people about my background. I work for a company called Blocksure, and what we're doing is creating a, I guess it's basically an operating system or an environment for in selling insurance for insurance companies for working in the insurance space. And we work definitely very strongly with smart contracts and working with any sort of network, help facilitate and smooth out the network relationships in terms of, you know, in terms of selling and servicing insurance contracts. So that's what I've been working with them for about 3 years now. So, and we've already got some clients, particularly in the micro insurance space, and there's quite a lot of interest in that in Asia. Because there's opportunities there with in terms of micro insurance, being able to bring in a low cost insurance and the using distributed ledger technology or blockchains as a way of keeping your costs down and keeping things running very smoothly. So, and
I find it interesting with Blocksure as well, because Blocksure they're a fascinating company, and I'm an advisor as well, so I'll hold my hand up. I've got a vested interest in supporting them, but they're brilliant in that. The best thing about Blocksure is they don't really talk about it being blockchain based. They actually talk, you know,
what's the name?
No, well, that's it. But you know, I've actually seen the application in use, and you don't realize you're using a blockchain, and it doesn't use cryptocurrency either.
No.
You know, whereas some projects, I saw a few other insurance propositions around the same time that Blocksure were establishing themselves, who were trying to do similar things but using cryptocurrency, and they all failed because there's no need for it. You know, traditional insurers don't use cryptocurrencies, and so, you know, there wasn't really any value in using that. So it's been great to see Blocksure paving the way and proving my point that
I mean,
insurers.
We are looking at cryptocurrencies now, but it's more for settlements and exchanges and that sort of things. But we're not going to, you know, we're not going to adapt it unless we're going to actually use it. But the blockchain technology itself has been very valuable in terms of being able to work with distributed ledger technology. So I would say there's a definite, I mean, there's definite cost benefit for, you know, for the organizations that we're working with.
And what's even more interesting is that you're on the Corda platform, aren't you? In terms of, and Corda, funnily enough, we had on the call last week.
Oh yeah.
One of the guys who's ex-R3. So R3 are the company who produced Corda, and he and I knew each other from having been in London a few times now. It's quite funny because Corda is probably one of the more successful blockchain-inspired platforms in the financial services sector, which strictly speaking isn't blockchain. It's a variation of distributed ledger.
Yeah, it's distributed ledger. Yeah, so it's yeah.
But as I describe to people, it's a bit like talking about Hoovers, vacuum cleaners, and Dysons.
Yeah, it's a bit like that. Yeah.
They all pick up dust. And that kind of works on.
Yeah,
that's good. Hey, and we're joined by Michael. Michael, hello there.
Hi.
Hey, good to join us, Michael. How's it going?
I'm all right. Haven't been back for some time.
I thought I recognise that. I thought it's good to see you back again. We've just been talking about blockchains, distributed ledger, a little bit about the difference between cryptocurrencies and crypto tokens and that kind of stuff as well. So, are you staying active in the crypto space at the moment, Michael?
Yeah.
Anything been happening of interest you've seen?
Not much over this week. It's pretty quiet recently.
Yeah. So Michael's staying typically quiet again. He had some good stuff, but this time around he's staying quiet on it. But going back to something again, this goes to show that there's such a massive array of things that you can learn in this space around whether it is about cryptocurrencies or tokens or blockchains or distributed ledgers. That there's so much going on in this space. It's kind of fascinating. And I don't know if anyone is following the whole DeFi space of the decentralized finance, which seems to be growing at the moment.
Yeah. Actually, I work with a DeFi company.
Are you able to share any more about that, Michael?
So I'm not sure like what's everyone's knowledge, but I suppose like, everyone has some kind of background already. So I won't go into like the details, but basically the company are working for, they are doing like a Euro stablecoin and it's decentralized. So it's not like we have like a bank or like a centralized committee that control the tokens. So one of the things that they would do is they have like a community and they vote how to continue on. For example, like the interest rate, what rate is set for people who try to like stay on the platform and charge then also the assets collateral like that. So this is basically the concept of decentralized finance.
Yeah. So always interesting when people talk about stable coins. What is it that you're stabilizing against?
I think basically there are three kinds of like stable coins. For the one that I'm working with, they're on using collateral. So you could use like a Bitcoin or Ethereum or Matic or Polygon, the kind of stuff.
Okay, so you've got a stable coin that is stabilized against a cryptocurrency asset.
Yeah, they are euro. They are against euro in that case. They're pegged to the euro.
Oh, okay.
Because they're based in the eurozone. Yeah, they're based in the eurozone.
Okay. Because it's always interesting for those who don't know. A stable coin is a crypto token typically that is pegged, so it's linked in some way to an underlying asset. So you might have heard of Tether. Tether is a US dollar stable coin, in that Tether hold reserves or equivalents of reserves of US dollars against the Tether coins that they produce. Now, admittedly, if you've gone through some of their audits, that's not absolutely correct. But the idea is that Tether is always worth $1 US. So it acts as a very handy thing that if you do a lot of trading on Binance or whatever, you might not want to transfer from Bitcoin to Ethereum or Bitcoin to Dash, but you might sometimes want to kind of exit from the crypto volatility for a while, but not cash in. So what you can do is you can buy a stable coin, so like Tether or BUSD or one of the many other ones, which is tethered against a fiat currency or against the crypto asset, as Michael's saying in their case, the product's going to be tethered against the euro. So it's kind of a way of keeping your money in the crypto space without it being in crypto, if that makes sense. Does that make sense? I'm seeing nodding. That's good.
Yeah, it does make sense. Yeah.
Yeah. But
still, it may fluctuate with the currency, but yeah, it is still the money of that particular currency. Yeah.
That's right, and it's funny as well. In some of the crypto groups I've been involved in, particularly in Telegram space, where people say, "Oh, I've bought into the stable coin, but it's not going up in value very much. Why is that?" And it's like, that's the whole idea of it. Exactly right.
I think they got a bit lost.
You're absolutely right, and it is funny. Again, if you're new to this space, actually, there's no reason why you'd necessarily know that. And
there are stable coins that actually they don't do the peg very well, so you could do arbitrage. So I don't know what angle those people are talking about, but maybe they're like looking for arbitrage opportunities. I don't know.
Yeah, you're right. And that's a good point Michael makes as well. Even with a stable coin, it may be stabilized. For example, Tether's stabilized against the US dollar, but it might be that it still has a degree of volatility of, it might be worth between 99 cents and $1.01. So it's got like a 2 cents spread.
I thought it was supposed to be pegged to the dollar. So you've got the volatility of the dollar.
Yep. So it's supposed to be, but it never is quite.
All right, okay. Because there was a coin I heard of, and I'm actually met them. It's called Beer Coin, and it's started by a brewing conglomerate. And basically, you can always buy one beer.
Yep.
And you go, well, I mean, hey, that's a bit frivolous, but when you think about it, well, that's creating a stable coin because it's pegged to a certain value,
And even better because they've got 2 locations in London where you can actually use the beer coins to buy the beer.
Yeah, you can buy the beer, but if you want to go into a stable platform, you're worried about your Bitcoin dropping or whatever, and you want to switch into a stable. Nothing stopping you from buying beer coin, and you can hang on to beer coin and then sell it back. So it retains its value. It doesn't move. It's not gonna, it's not gonna have any movement. But
you're right. It does mean that one beer coin in effect is worth 1 pint of beer, or 1 pint of that particular beer.
Yeah.
Absolutely on that. But with the stable coins that are stabilized against fiat currencies, so like against the dollar or against the euro or whatever, but they tend to be algorithmically pegged, which means there's a little bit of volatility and there's coding in there. So you do find that there is a bit of volatility somewhere. Just while we're talking at the moment, in fact, I'll show you. I'll pull up. This is Bitcoin against USDT.
I've had a bit of volatility with beer though myself, so
that's fair. But you do get this volatility, and as Michael says, if you've got a crypto token, which is a stable coin that has got a little bit of volatility and is sold on several exchanges, then you can start playing the algorithm. You can start them playing the arbitrage game of buying off one exchange and selling onto another exchange in some way, and make money out of that in some ways. Some companies do that quite well, others less so. But yeah, I was just going to see if I could find an example and we could actually show that. So talk amongst yourselves as I try and find trying to find anything of interest now. So I tend to not go into stable coins that much. In fact, there we go, US dollar coin. If I pull up, I'll just share this now and we'll show you what I mean on this. It's sometimes easy just to show these things. Okay, so here's a crypto token. You can see it says USD coin. You got that up on screen at the moment?
Yeah.
Yeah. And it's pegged to the dollar. But you can see that it's got some volatility. It dropped down here down to 0.9997 cents and went up to 1.2. So it's not that much in the grand scheme of things. But if that's traded on multiple exchanges and you can manage to buy a load at 0.99997 and then sell it at 1 point whatever, you're still scalping and you're still making a margin on that. And that's what some people and some companies do. Not for the faint-hearted, though. But just looking at some of the other things going on in the crypto world at the moment, I was taking a look at Bitcoin.
I think just one more on the stablecoin arbitrage. I think we need flash loan. So like you said, like not for the faint of heart, because they do need like programming, and then they need to make sure they get these things right, because otherwise it would be quite tragic.
You're right, and that ties in with something else that some of you may have heard of, flash loans. And that's where it gets really interesting, because what you can potentially do is a flash loan is where you can temporarily borrow crypto from somewhere. You can then use that crypto to buy crypto somewhere else and then sell crypto somewhere else and then pay off the loan. And the reason it's called a flash loan is because that buying of a crypto, selling the crypto, and returning the loan all has to be done within one transaction cycle. So it's kind of like boom. So it's all done programmatically. And what it means is it's a way of playing the arbitrage game if you know what you're doing with programming of these things. And you'll see that that's what some people do, flash loans, and they make lots of money on doing these interesting trades. It's also where you hear quite a few scams, or sorry, scams is the wrong word, hacks, where someone launches a new DeFi capability, like a loans facility, or they launch a new crypto token or something, and a hacker comes in and develops a flash loan that allows them to basically totally sway the market. So what they'll do is they'll do something like they'll borrow the equivalent of $100,000 worth of Bitcoin. They'll use it to buy a whole load of a cryptocurrency, which will then cause that cryptocurrency to rocket up in price. They'll then instantly sell at the new higher price, dumping it, and then pay off the loan, and then they've made a load of money. And so it's quite an effective way of manipulating things, really.
Yeah, I think they're playing the low liquidity in some of the crypto markets. That's why they talk about the liquidity pool, and shallow pool is very dangerous.
Exactly right. And for those who don't know what a shadow pool is, that's something quite often the crypto exchanges do this, and it's the same as in traditional shares and stocks and that, whereby where you're buying crypto, you may not actually be buying the crypto from the open market. You might actually be buying it from a pool that the exchange holds already. So what that means is that they can then see all the trading activity going on and you don't see it. So just something to watch out for. So something, again, which can get manipulated at times. If this sounds all complicated and risky to being manipulated, then that means you understand it. There's the simple thing on that. So, well, Michael, thanks for sharing the stuff about the stabilizing the euro. Be interested to see where that develops. And
yeah,
are you public with that yet, or pre-launch? Is that a public project yet? Is it open to the public?
Public already. Yeah, they are.
Right. So, did I just baffle everybody with things there, or has anyone got any more basic questions? Everyone's gone quiet. So, Sandeep, whereabouts are you based, by the way?
Based in Reading.
In Reading, yeah?
Yeah.
Yeah. Not that far away from me then. So.
Oh, where are you based?
So I'm in a place called Marlow, Buckinghamshire.
Buckinghamshire. Oh, okay. Yeah. It's the same county though. So.
Yeah. In fact, the reason this is called the Bucks Crypto Club is because it was originally set up in Buckinghamshire and hence Bucks. And nowadays, everyone thinks it means bucks, as in making loads of money.
Lots, yeah. I mean, when I see that as well, at 6:45, it's bucks. Is okay.
Yep, exactly that. So, well, that's good. So, you say you've got a crypto account, but you're still fairly early in the crypto space, would you say?
That's right. Yeah.
Okay. Yeah.
So I mean, I'm a little worried about how can I sell and buy other currencies, like I can do with the Bitcoin, whereas not with the XRP or other currency. So I have to use Uphold to do that, maybe. So that's where I'm little not sure how that can be done, buying, selling other than Bitcoin. So yeah, if we can give some insights about that, that would be really helpful.
Okay, I have to admit, my experience is typically just buying and selling straightforward cryptocurrencies using normal exchanges. So I've tended to use Coinbase, Binance, Kraken, those kind of things. I don't go in for the more complex. Just saying, you're talking about Uphold, which is more in the DeFi space, and that's where you can start doing something, earning interest and that kind of thing. That's not something I've done anything of. I don't know if anyone else on here has in any way. No, I'm seeing slightly shaking of heads. Okay. Sometimes we get people on who do that kind of thing. So maybe try again another week where we can open that up. But okay. I tend to find it's complicated enough just trading through straightforward exchanges without adding extra layers of things, kind of thing. So
but with the Coinbase as well, that's not possible for the other coins, isn't it? Doing directly to the exchange as well. So is there a way for it?
So what you tend to find is that you've got what I would describe as gateway exchanges. So Coinbase is one of them, where they allow you to exchange your fiat currency for crypto. So it might be a fiat currency for Bitcoin, Ethereum, typically. And then you can go on to other exchanges that don't trade in fiat currencies, but do trade in Bitcoin and Ethereum. So I call it as a gateway entry, because you might go onto something like Coinbase, use that to convert your dollars, pounds, euros, whatever into Bitcoin, and then use that Bitcoin to trade on another exchange to buy different cryptocurrencies, because Coinbase has got a limited range of cryptos available, whereas Binance has got, in fact, we'll have a look. I think it's several thousand pairs these days that they have on offer. In fact, let's see what Binance say. You know, look at all the different things they've got which you can buy with Bitcoin. You can see from this drop-down list, there's I think it's several thousand of them that you can get, but you need to have Bitcoin in the first place, type thing. So is that what you're talking of? That the kind of thing you're describing?
Yeah, I mean, that's correct. Yeah. So I mean, my question here is, let's say if I want to sell Ethereum, it's not possible in the Coinbase. So if I want to sell, it does give me the option saying that, I'm just loading that as well. You can't sell directly to the currency, isn't it? You have to convert that into another Bitcoin, or you have that wallet available, but that has to be somehow, converted into the currency. So
that's right. So typically you may convert it either from Ethereum into Bitcoin, and then convert the Bitcoin on your Coinbase account into pounds or dollars or euros, or alternatively trade it through an exchange that does deal in Ethereum to pounds, for example. So there are some that do that. I thought, does Binance not do that? I can't even remember now. Have they got a GBP? I'll take a look separately.
I think my question, I mean, thanks for that, for the Ethereum side, and also XRP side. It doesn't give me the option to sell as well. So that's another thing. Is it something, the story you mentioned, it's in the court in the US where, that's where they suspended that service?
Yeah, so a lot of exchanges suspended trading XRP as soon as it was announced that there was a court case going on, because the court case ultimately is to determine if XRP is a security or not. And it's a security by definition of the US Securities Exchange Commission. The problem is that if the courts decide it is a security, then that means that not only will Ripple be hit with a massive fine for dealing in securities when they weren't registered, but it also means any exchange that have offered to buy and sell XRP will be implicated as having been involved in buying and selling unregulated securities. So a lot of exchanges just said, we're not taking that chance, we're not going to sell XRP. So they delisted XRP when the court case came out. So that's why a lot of exchanges don't now sell XRP for fear of that they don't want to get prosecuted themselves or risk the potential of prosecution. The really interesting thing though at the moment, and it's a shame we've not got someone else on who monitors the court case, is my understanding is that the court case at the moment seems to be leaning in favor of Ripple. And so that could be really interesting, because that could mean if they can prove that XRP isn't a security, then that means not only will the SEC case fail against Ripple, but also it then means that the exchanges can then start selling it again as it's not a security. So we'll see on that. So that's why you'll see a lot of exchanges don't sell XRP anymore, or sorry, don't trade XRP anymore.
Okay, cool. So is it still my money is secure, or the coin is secure until I can hear the judgment?
Of all the industries to use the word secure, crypto is probably not one of them. There are just the nature of it. There are risks with anything in finance, in crypto, or whatever. So it depends what you mean by secure and what you mean secure against. type thing.
So, I mean, what I mean is secure against the value what we have at the moment. So let's say once they have the court case, and let's say I have, you know, a couple of £100 there in the, you know, against the XRP, and if they have, you know, the negative result from the court case, what's going to happen to that? Is it devalued completely, or it's gonna, you know, completely
Sure.
disappear? Yeah.
Okay, so I'm going to offer with the starting thing that this is not financial advice. And anything I ever talk about is not financial advice, legal advice, or taxation advice. The thing with cryptocurrencies, along with anything else, is typically the price has got built into it a future expectation in some way. And so the price of XRP at the moment, you know, it's currently trading at 78.8 cents, has probably got built into it an expectation of what the likelihood of the court outcome is going to be. However, it could be that the court case comes out and a load of smart money, say, waits for the market to go, oh, that's good, and the price starts going up, and then the people who've been holding XRP for ages dump it, and so the price could go down. We just don't know. So the court case, common sense would say, if the court case goes in favor of Ripple, that should lead to a rise in the price of XRP. But I wouldn't be so sure. That there's no guarantee of that whatsoever. So it could go up, it could go down, or it could do as many cryptos do, and it'll just weave around a little bit type thing. But if we look back to, I mean, the whole, when the court case first came out, I mean, this was where XRP went to when it was at its peak. It was at like over $2 at one point. And then I think the court case came out, and that's where it like kind of like died away and collapsed. And then there's news came out, it went up and down. There's really no way of knowing where it's going to end. So I don't know is the honest answer.
Okay, cool. Thank you.
So sorry that doesn't answer the question as such. But,
no, I mean, yeah, it's you know, it's everybody's unsure, I think, isn't it? So it's nothing, you know, there is an answer for it. I think it just wait to hear from the court case, and you know.
Yeah, and it is interesting that, you know, each time there's an update from the court case about, you know, additional documents filed or whatever, you see Ripple's price or XRP's price, sorry, go up or down. And sometimes it's counterintuitive. So there might be something that comes out and you think, oh, that goes against the Ripple case, and XRP goes up. It's like, the reality is that this market, like any other market, is exposed to manipulation. And so you just don't really know what's kind of going on. But yeah, XRP is definitely one, or the Ripple court case, definitely one to keep an eye on to see what goes on, because the outcome of it could have quite profound consequences for other crypto tokens. Yeah, definitely one to watch out for.
Yes, thank you. I'll keep an eye.
Yeah. And I don't know, I'm trying to think if there's been any other stuff that's been in the news lately, because, you know, Bitcoin seems to have been fairly stable of late. Last week or so, it's been hovering around about $38,000, $39,000 mark. I know in Europe, there's a lot of stuff around Russia and Ukraine. People thought that would lead to Bitcoin and other cryptocurrencies being treated as kind of like a safe harbor. So whenever there's uncertainty in the world, investors tend to move their money into safe harbor things, so gold, platinum, silver. And the thinking at one point was that it was going to be cryptocurrency. But I'm not seeing any massive cases of that at the moment. If you look at Bitcoin's price here over the last few weeks, and you say, well, you know, where did the Russia-Ukraine thing kick off? You wouldn't really know looking at this chart. But it's been interesting. It's been fairly settled the last couple of days. So I wonder if it's about to break out, and whether we're about to see a major move in somewhere of it either going up or down. Because it seems to have just been cycling of late. and it seems to have just settled down around the $38,000 mark. So my suggestion, and again, this is not recommendation financial in any way or anything else, is keep an eye on Bitcoin for the next few days, because I have a feeling that it's about to break out of the recent trends. You know, it had this little surge earlier on today, where it went from, what's that, 38.5 to 39, so $500 in a matter of hours, which in traditional markets would be, you know, really noticeable. In the crypto market, it's like no big deal. But it does seem that Bitcoin's been channeling lately, and quite often you get channeling, which means that the price stays within a tight boundary, and then it breaks out in some way, and it may break out higher or lower. Don't know which way, and don't know if anyone's got any other thoughts on it or not. No, everyone's staying on quiet on that. So it's always funny when you say to people that don't know if anyone's got any other thoughts on it, they stay quiet. So anyone got any other things they want to ask about? Please ask away. Or Sandy, keep asking your questions. They're always good.
I mean, yeah, I think I'm good at the moment. It's just about the Bitcoin prediction as well. I mean, with your prediction, so, you know, if you would have seen some sort of jump, you know, you would have seen earlier. It is now too late, I think, from Russia and Ukraine point of view, isn't it?
Again, there's this, what's the theory? Buy on the rumor, sell on the news. And so it's the whole thing that prices tend to have baked into them what people know is going to happen, and then they sell when it actually happens, or they buy when it actually happens. So I think some people started noticing what was going on the border with Ukraine before it actually all happened, and I think there might have been a little bit price movement, but I don't think anything substantial. So really don't know. You know, people do say all the time, you know, I get alerts on my phone sometimes, you know, Bitcoin's gone up 5% or down 5%. I start getting messages from people saying, why was that? You know, what caused it? And the reality is, I keep saying that the major cause of most crypto price movements is a butterfly in the Amazon flapping its wings. And if you understand the theory of chaos theory, which is where a completely random event in one place causes a major impact in another, I think there's a load of Bitcoin butterflies somewhere that just flap their wings sometimes, and that's what causes the price to change. And I know that doesn't help.
Yeah, I mean, yeah. So sometimes it may be like, you know, kind of Elon Musk buying, you know, 1 billion of 1 billion worth of Bitcoins, maybe, you know, those kind of bigger investments also make significant change in the price. Does it, isn't it?
You're absolutely right. And I do acknowledge that tweets from Elon Musk about Dogecoin do affect the price of Dogecoin. You know, if he says something about Doge, then the price will suddenly leap in some way. And that's probably a form of market manipulation, whether it's intentional or otherwise. But there is a correlation there, you're right. And it's one of the few things where you can actually point to an event, and that event might be, you know, a tweet from Elon Musk saying something and an impact on the price. But for most things, that just doesn't hold true. I did it in the crypto group I run. I think I did a chart 2 years ago, which plotted the peaks, the sudden spikes and sudden drops in Bitcoin. And I plotted it against news items to show what the correlation was between what was going on in the news and what was happening to Bitcoin price. And I actually identified that there was a direct correlation between Premier League football announcements and Bitcoin price. And actually, there's no link. There isn't, but for every time that there was a sudden Bitcoin spike or a Bitcoin drop, I could actually find a Premier League announcement of a new player had been appointed or a new manager had been appointed or something, which goes to show that actually there's no link at all. It's a little bit like those who are into statistics will be aware that there's a very well-known correlation between movies that Nicolas Cage has released and swimming pool deaths in the USA. So it's quite bizarre. If you actually plot out how many movies Nicolas Cage releases each year, and you plot out how many tragic drowning accidents in swimming pools in the USA there are each year, they align really, really well. And unless it's people who watch Nicolas Cage's latest movie and think they've had enough and they go and jump in or whatever, but there's no reason why there should be a correlation, but there is. There is a definite correlation. This is why I spend a lot of time explaining to people how correlation and causation are two very, very different things. And so you might get a correlation at times, but no causation. So, yeah. Elena, I don't know, you must be building your knowledge in the crypto space quite quietly and nicely at the moment. Anything that has interested you or that has surprised you so far that you'd like to share?
I'm just enjoying being here. But well, actually, I have a little question, as simple as it may be. Let's do a little recap. We started our session today talking about NFTs. Then at some stage we mentioned stablecoins.
Yep.
So, and that got me thinking. I still probably don't have enough knowledge to understand it, but what would be, could you explain it to me? What is the difference between a stable coin and an NFT? Because stable coins are backed by tangible assets like gold, diamonds, or property. So what if I have a stable coin and I back it with my house, which is unique? Does it make it an NFT?
I think that is absolutely a fantastic question. Actually, it's a lot. It's a lot deeper than perhaps anyone might realize. So, okay, stable coins. It is the value that is stabilized. Okay, so one USDT is worth $1. Okay, but it's not worth a specific dollar. Okay, so if it was, I don't even know if I've got any of them anymore, but do I have? Oh, I have. Fantastic. Okay, so here is a British token. It's called the £10 or whatever. Okay, if you had a stable coin that was tethered against £10, then that would be a stable coin. Okay, if you had a coin that was stabilized against the serial number of this particular note, then that would be an NFT, because the NFT would show ownership of this specific note, not the ownership of £10. Okay. Okay. So
and then if the serial number is 000111, someone can decide that this is very valuable to them and they can value it.
Exactly right. And that's why I love it when people say, well, you know, a £10 note is worth £10. A £10 note is worth £10 unless the serial number is a particular sequence that people are interested in. So there are certain serial number sequences, you know, as you say, like all zeros, all nines, or 1, 2, 3, 4, 5, 6, 7, 8, 9, or whatever, which actually means that people will pay more than £10 for that £10. So you're actually right. You've absolutely nailed it there. That this is worth £10 unless, for some reason, the serial number makes it worth a little bit more. Or the other thing is that this £10 note, if I got it autographed by somebody, and it's an autograph that we can verify and validate that it's someone genuine, you know, so if Elon Musk had autographed this £10 note, it's probably worth more than £10. but
Yeah.
it's only then this note which is worth more than £10. So that makes it non-fungible. So this
Okay.
is no longer worth. I don't think I've got another one. Oh, I have. Wow, I'm rich. So all of a sudden, if this one has got Elon Musk's signature on it, so is worth £20, then that is worth more than this one, which is just worth £10. So they're non-fungible, they're not exchangeable straight away. Whereas, as just pure £10 notes, you know, there's no difference between the two of them, they're both worth £10. So if they're exchangeable and there's no variation, they are fungible. And if they're not exchangeable and they're unique, they're non-fungible. So this is the thing about using a token to show ownership of something, that it's a bit like having a token that shows ownership of the Mona Lisa. The reason that that token would be worth a lot of money is because there's only one Mona Lisa. And so it's got scarcity and that kind of thing. Does that answer it okay?
You know, thank you so much. That was a brilliant answer.
I love the question. I think that was really good. And so sometimes it's what people think is a really basic question actually reveals some quite profound things. So I had a question a couple of years ago now where somebody said, well, why are you even bothering to teach us about Bitcoin? Because I can't afford a Bitcoin. And at that time, I think Bitcoin was trading at $20,000. I said, what do you mean I can't afford a Bitcoin? She said, well, Bitcoin's $20,000. I can't afford $20,000. I said, okay. Need to explain that a Bitcoin is divisible and you can buy 1/100 millionth of a Bitcoin, and that's called a Satoshi. And just like the way a pound note is divisible into pennies, a Bitcoin is divisible into Satoshis, just like there's 100 million of them. And it was, again, she asked this wonderful question about a Bitcoin, and I'd never thought about the very fact that they are divisible and everything, which is another feature of fungibility, by the way, the fact that you can divide it and slice it, which is why, as you say, your house, if you had a token to represent the value of your house, that would be a non-fungible token because you can't divide it into pieces. You know, it is a house. You might be able to divide the ownership of it into several pieces and sell it off as real estate, and there are projects that do that. So yeah, hopefully that was a reasonable explanation there.
Okay. And does that also mean that if an NFT is of ERC-71 standard, then stablecoins would be ERC-20?
They can be. So the ERC is just it's I can't even remember what the letters stand for now, but it's a standard that is used on the Ethereum platform. So Ethereum is one of the several blockchain platforms. ERC-20 is simply a smart contract standard. So how a particular computer program is written, which is all a smart contract is, and an ERC-20, it's a published list of what gets included in it. So from address to address, unit, that kind of thing. And so ERC-20 is typically used for crypto tokens that are traded in some way. ERC-721 is just another program specification that is typically used for NFTs. And then there's another standard called ERC-1155, which is another programming standard type thing, which is used for a different type of token. So typically, a smart contract for a crypto token will be ERC-20 if it's on Ethereum. ERC-721 is a lot of the NFTs. If you use a different blockchain, then the coding standard will be a little bit different. So you've got the equivalents. I'm trying to remember what they're called on some of the other blockchains now. But you'll hear different standards used. All it means is it's a standard format and standard approach that's used.
Okay. Thank you so much.
No problem. Okay, we're coming towards the end of the hour. I like to close these off on the hour. So I just wanted to quickly open it up to see if there's any final questions or comments or anything before I finish for the day? No?
No, not
Fine.
for me.
It's a brilliant session, yeah. So it's useful.
Okay. Well, one of the things is that I'm always honest in stuff I don't know. So that's the thing on that. But always really happy to answer anything that where I do know. So hopefully for everyone who's watching, that was interesting and informative. Great to be able to answer some really basic questions as well in a way that hopefully people understand a little bit better. So thank you everyone for coming along today. For those who are watching this on YouTube, hope you enjoyed it, and do click on the subscribe, like, do all the thing YouTube people do, and hope to see you all again next week, or on a future week at least. Have a great one, folks.
Yep, thanks
Cheers,
everybody.
cheers, bye.
Thank
Nice
you.
Bye.
meeting you. Bye.
Bye now.